the right line. Okay, I'm live. Hi everyone. I hope you guys are doing well. I just wanted to do a real quick live for my YouTube family here. So I wanted to share some information with you guys on a live. I went on Facebook and I gave the information, the difference between authorized user trade lines and primary trade lines, unsecured trade lines. So, what is the difference? And why I'm a big advocate for trade lines such as my jewelry club, and a lot of people can't grasp the difference. Okay, a lot of people want to get secured trade lines, and I want to give you a perspective on why unsecured um, unsecured line of credit is your ultimate goal. So here's the long and the short, especially when we're going through times like this. I always tell you guys, you have to know there's a difference between your credit score and your credit profile. So your credit score is a product of items on your credit profile. But there is a difference when you're looking at the structure of your credit profile. So think about it like this. If you're trying to lose weight, a person could lose weight and focus on the scale, right? So they could just be focused on what they saying losing body mass or weight. So you can focus on the scale and you're losing weight, but what they call you look more slim fat, or really your same body composition has not changed. So you can diet, and that weight that you're losing is muscle, and not only fat and muscle. And we all know muscle weighs more than fat. So you can have your when you're starving yourself or really restricting your calories, you can begin to break down, the body will begin to break down muscle along with the fat. So you can lose weight, but in essence, you could be in worse shape than you were before. Your ultimate goal is to try to retain muscle mass and lose strictly fat. So it's a difference. So in order to maintain muscle mass, you want to focus on composition, body composition. That means to retain your muscle and strictly lose the fat. You don't want to focus on the scale, on just numbers. You want to maintain as much muscle as possible by losing fat. Because take The Rock for instance. You might have a gentleman that is much more lighter on the scale than The Rock, but he looks absolutely nothing like The Rock. The Rock, I believe, may be at 270, but when you look at his body fat percentage, he's probably more lean than the average male that's running around here. And he has more muscle mass because he didn't focus on a scale, he focused on composition. Therefore, when you look at The Rock, you don't care what the scale say, he just looks better. This is the thing with your credit score and your profile. A lot of people treat it just like dining. They just want to see the scale move. That's the score. I just want to see the score go up. And they don't focus on your profile. You don't focus on the composition part. What is the mix? What is the, what is this profile built on? The banks do look at that. This is the underwriting part. And you're going to see it more and more now that we have an economy that they know people employment, that unemployment They're looking for 47 million people to lose their jobs. They're going to really look at your composition or your profile and your profile and your income more directly, because in essence your credit profile and score is connected to your character. So they want to see how you are financially operating personally. What kind of person are you? So where this comes in effect when you're dealing with authorized user accounts and primary unsecured trade line accounts is this. And I'm going to even throw in secured credit cards. If you are a person, just you, and you don't know me personally, you never met me, you never seen me, but I'm coming to you to borrow money. And the only thing that you know about me is what's on, let's see, this paper. This is how you view me, and this is how you see me. If I wanted to come to you and have an unsecured line or borrow $10,000, and you look at what my life has been on this piece of paper, and you see that, okay, she has some car notes called installment loans. She has some student loan debt, 50,000, and her car. So 50,000 of student loan debt. She paying about $500 a month to that. She have a car note. The average one in America, I think, is $532 a month. I'm paying $532 a month. Couple credit cards of, let's say, $3,000, and she spent on that $500, and the other one, $1,000, and she got a $4,000, let's say, credit card. And then I see 2 secured credit cards. Or let's say we're not going to even say $5,000 credit card. X that. All I see along with that card note is 2 or 3 secured credit cards. Would you, if you see this profile, 3 secured credit cards, a car note, and student loan debt, would you want to lend me? Now, student loan debt, I'm paying $500 a month. Car note, another $500 a month. That's $1,000. And I have secured credit cards. And let's just say I'm paying that on time. But my credit score, let's say, is a 725. 725. And you looked at my income and I make $30,000 a year. Would you want to lend me $30,000? To you, do I look financially responsible? It looks like I got a ton of debt. That's what it looked like. I don't have no assets. I'm working, making $30,000 a year. I gotta pay $1,000 of my income monthly is just going to a car note and a student loan debt that's gonna be there. Not including, I know I have to pay car insurance. That person have to pay car insurance for that. And I just have secured credit cards, so nobody trusts me enough to give me unsecured. I had to put money down. That you had to put money down in order for somebody to lend to you. I wouldn't want to lend anybody that looked like this on paper anything if I'm looking at it. I don't have the confidence that you're going to pay me anything back. You wouldn't have the confidence that with these items, I look personally responsible. Think about it. How are you supposed to recoup for a person who profile look like this your $30,000 back when they only making, or let's say you're $20,000 back and this person makes $30,000 a year? So now in this whole crisis, is this person going to have a job? Am I going to be out of $20,000? That's what it looks like. So you have to think about it. The way and what's reporting on your profile matters. Now, when it comes down to secured credit cards, it looks like you're not financially responsible. It looks like that you have to have training wheels because nobody trusts you. You had to put down $200 just for a company to extend you credit of $300. That doesn't look very positive. It don't look like you have a lot of tools in your kit financially to be financially responsible. It looks like you're a liability just waiting to happen. So what I'm telling you guys, this matters. Now, if you don't know what an authorized user account is, let's talk about authorized users. Authorized user trade lines or an account is, let's say my father, who's older and he's close to being 70, has a long, good credit history. So he has credit cards that is been on time forever and has established credit. If he adds me on to his credit card, what would happen? He can keep the card, but I would adopt his positive payment history, or what they would call piggyback. So where this is helpful is if I have a trouble payment history. So let's say if I had a couple of missed payments. So now I can help with that reporting by adding on all his positive history. So if I have 4 missed payments, by adding his positive history of years of paying on time, it increased my credit score because of the payment history. The average of what me paying on time will go up by adding that on. Also, it looks like I have another unsecured line of credit reporting. So let's say I had credit card debt where I owed $100. I had $100 credit card and I owed $90. So my utilization on that would be real high. By him adding me on, it would balance my utilization out or bring it all the way down. Because say if he had a $5,000 credit card or a $10,000 credit card, it'll help bring, let's say it was $10,000, that utilization down to less than, with that $100, down to less than 1%. So it'll bring my utilization very low, 1 to 10%, in that ballpark. It will bring it down, which will have me to have a credit score increase because my profile is reporting that. So it will adjust my credit score and cause it to go up positively, in a positive manner. But here's the thing. When these trade line companies sell you trade lines, what they don't tell you, a lot of times where people are purchasing these trade lines, they're doing it only for a short window of time, so 4 months. So if you're paying $700, $1,000 to be added on to an authorized user account, it's only for 4 months. So the way it used to work, if you were purchasing a house, you can be added on as an authorized user, and it will increase your credit score and look like you have a better credit score than what is really there. And that it will be reporting there temporarily, and then when you close on your house, they will take you off. That's what you're renting the trade lines for. But that's an old system. They don't work like that anymore. Unfortunately, after the housing crisis happened, now they make notations that this is an authorized user account. So if you're going to buy a house, even now, if that person is not your spouse, they're going to make you remove yourself off of that authorized user account and rerun your credit. FHA is definitely doing that now, rerunning your credit. They want to make sure that you're not getting that extra boost from that authorized user account. They only want to look at your primary credit cards or unsecured credit accounts. Okay, so they my face itch. They don't want to see that at all unless that person is your spouse. That's it. So those days of that working for you is over in that manner. So it makes absolutely no sense for you to purchase or rent authorized users trade lines. It's great if you have a relative with great credit history and they can add you on. That's wonderful. So if you're going to get a car, that might work for you. That might work great for you to increase your credit score to get a lower interest rate. But when it's coming to get assets where the rubber really meets the road, those things is not working. Authorized, you will see if you look on Credit Karma, it'll tell you primary credit account, authorized user account. They can see the difference now. Before it didn't report like that. It just looked like any other primary account for you. But now they let it be known, no, this is an authorized user account. So when banks are looking at that, even with underwriting, they do take note that, hold on, this person have a lot of authorized user accounts. So they do see, oh, that's not their account. Okay. So that does play a part in underwriting. What is way better on your credit profile is primary unsecured lines of credit. That's where a My Jewelry Club counts are great. If you don't know, to get $5,000 of unsecured credit is one of the best things you can do for your credit profile. Let me explain why. Number one, why $5,000 is a sweet number, because if you're looking for getting business credit in the future or trying to personally guarantee an account because you're trying to build business credit, the minimum requirement that you have to have a primary line of unsecured credit card of $5,000. If you don't have that, they don't want you personally guaranteeing anything, getting access to business credit. They want to see that's a requirement. Well, you will say, well, why is that a requirement for the banks? Because this is how it works. Banks work together. They have a system. So if you have starting off in your credit, you have a $500 credit card. The next company that's sending you advertisements or the next company that you apply for a credit card with is only going to give you $500 or maybe $600, $700. It's going to stay in that category. It's very hard for you to reach that limit of getting to $5,000. It takes years because most credit card companies will only give you a credit review or extension or to add to that line of credit they give you every 6 months for a review. So you might get twice credit increases 2 times a year, twice a year. So it would take you years to get to that level of having a $5,000 unsecured line of credit. So this actually jumps you to the head of the line. It gives you that without going through that process. So now when you start getting those pre-approved offers in the mail, they're going to see a company already gave you a $5,000 credit limit line. So then you qualify closer. Even if they give you $4,000 too, you're going to get a higher line. And usually they're match it. So they'll say, okay, that company gave you $5,000, we'll give you $5,000. Because that's how the system works. The whole system is driven by unsecured lines of credit, not secured, you guys. That's people have this thing that the quickest way for me to increase my credit score is to remove negative items. The quickest way is to add on unsecured lines of credit to cause your score to go up. Soon as that can report on, you'll see a credit score increase 20, 30, 50, maybe sometimes 80 points, depending on how low of a starting point your credit is. So catch that. So everybody pay attention to credit payment history, which makes up 35%, but they forgot utilization is 30% of your credit score, and it's only a 5% difference. You can adjust that category way quicker than trying to remove negative payment history. Okay, so you have to learn how to use these tools. Now, authorized user account could help with that 35% category by adding positive payment history. So if that's your agenda, that's the best way to go. But the primary trade line, unsecured trade line, is great in both categories because now you can make payments and build positive history of your own as while you using that card and paying it off. So it actually checks in both categories. Another thing that it helps you with, when you look at a primary unsecured credit card, if you have a card, let's say right now, it's a $600 credit line, credit card. So say the limit is $600, but right now you have almost maxed it out, and now you have it's like $500 being used on that card. If you add on this $5,000 limit, it's going to balance out your utilization. It'll bring your overall utilization down because now you added 5,000 of unsecured line of credit that is going to balance out that high percentage. So it's going to, for those who's close to being maxed out, and especially if you have a credit card that is $5,000 and you got 3,500 on that card, and it's like, oh wow, I would have to put a large amount down to pay that card off. This could be a quicker angle to spend 100 to report $5,000 worth of unsecured credit, and that'll help balance out your utilization. So let's just use quick numbers. Say that person have a $10,000 credit card, and they have $10,000 close to being maxed out. So, and let's say like close to $9,000. If you add this trade line to it of $5,000, you can bring your percentage, your utilization percentage down to 40%. So it'll help balance out your utilization, and you're gonna see for a more reasonable rate, you can adjust that quicker than you putting down a large amount on that card. So it might be a more cost efficient way to balance it out temporarily as you pay that card down. So it's great for that. Also, what it's great for is, like I said before, you are reporting that in your own name, and it shows that you're financially responsible. So now when you're going to look at or look for a loan and they look at the underwriting, they'll see, oh wow, this person has a credit card of $5,000 that a bank have given them because they trust them that much. Another bank, another lender like ourselves, and it's unsecured. So they didn't have to put any money down. They just trust them enough. And it took a while for that person to get that way. Because like I said, they understand that system. It takes a couple of years to get to that level. So it makes you look much better on paper for underwriting. So these are the tips that you guys need to know. That you need to focus on your credit profile, and your score is a byproduct of your credit profile. There are many cases that people can have a 600 an 80 credit score and a person have, let's say, a 780 credit score, 100 points different, but because the person with the 680 credit profile looks so much better and income category and don't have a lot of debt, they can get way more than you, because all of that matters. Incomes matters. Don't think that long as I have a 780 credit score, I can get whatever I want. That is so far from the truth. Income matters. What's reporting on your credit profile matters, because they see what your life been dedicated to. So if all you have is debt and secured credit cards, they can see you've been irresponsible for years, and you have no financial responsibility, or you're not equipped financially to handle having credit. They can see that by what you're reporting. So I hope that is helpful. This is why an unsecured line of credit is your best option than starting out with getting a secured credit card. Why would I pay $200 to have a $500 credit line reporting when I could spend $180 and have $5,000? So when they look at me on paper, I look way better with the $5,000 primary, a primary line of credit, unsecured line of credit, than your $500 secured line of credit. When the banks look at which one look better, they're gonna say me every time, hands down. Oh no, that looks way better. So you have to understand that. You have to understand how to build your credit profile. So income does matter. Not having a lot of debt, because a lot of you guys are not going to qualify for a lot, because all you do all your life is get debt. And it's not even positive debt that makes you money. It's not the kind of debt that you're getting your credit score to get a multi-family property to generate you income. All you got on your profile, all they see all your life, car note, credit card. You look like an accident waiting to happen. You just look like you got a consumer mindset, no self-control, no discipline, not going anywhere in life, you're not getting any assets, and they know you're a renter because it's not a mortgage, so it don't look like that you are doing anything responsible. All of these things really matter, y'all. I worked in the insurance industry as an insurance producer. Those that own homes get a cheaper insurance rate across the board, because they know that they're financially responsible. With Allstate, you get a discount for being a homeowner. All of this stuff matters. It has to tie into your character. All of that, it matters. They know that your behavior is different because you have a lot more to lose. They know you have went through certain steps to qualify for certain things. So even that's why your credit score, all of this matters with your insurance premium, your even if you own a home, getting insurance for your home. All of this stuff matters for a job now, because it ties into your character. And for those who work in the banking industry, they know if you have bad credit, it's very hard for you to get a job there. You can't have bankruptcies and a lot of that. That'll lock you out of the industry. Even with me, when I was a producer, insurance producer, they pulled your credit report to see. They don't want you handling money if you're in a financial strain. They feel like your character is at risk to steal or take money. So all of this ties in. So knowing this, you need to know when to use one or the other, or how to use a combination. Am I a champion for secured credit cards? No. I just feel like you can do so many other things to get a mix of credit. Once you start getting those unsecured lines of credit through a My Jewelry Club. A lot of these pre-approvals that the banks would choose you. They're looking. If you don't understand, they look for certain factors. So they buy these lists, the list, they'll buy them from the credit bureaus. That's what they do. They sell your information. That's why they want to gather as much information on you to sell your information. And what would happen is the bank look for people in certain category for certain banking products such as credit cards with rewards, points for airplane flights. They're looking for a better echelon of customers for that. So they're looking for somebody with a $5,000 credit limit. That might be one of their requirements. So when you start to understand how to dress your credit profile to be picked to get those pre-approvals in the mail, you have a way better chance of getting those because they came looking for you. So that's what you want to do. And you want to try to go after those as much as possible, especially if you're saying, okay, I'm trying to get my first credit card. I did this. Let me go after these pre-approvals. You'll have a better chance because they came looking for you as a customer than them. If you currently right now have a secured credit card, all your pre-approvals is dealing with a secured credit card. Basically high interest rate, really bad credit cards. Because that's what you're attracting. Because what you're reporting on your profile. So when your name come up, when those kind of companies are looking for somebody that we can eat a lot of high interest off of, who fit in that category? You do, because you got those secured credit cards. So that's the only offers that you're gonna get. So it attracts that crap to you. So I hope this was helpful. I hope it gave you insight to understand how you need to position yourself and what strategies you need to do amongst this corona outbreak and virus. You have to start, number one, reducing. If it's not is it not too late for you, you need to start walking down your debt. Now, this is something you really should have been participating in this whole process. If me as a landlord, if they're saying that tenants can't pay rent for a month, that shouldn't be the thing that breaks me, because I have money stacked to the side for things like that. Because while I was making revenue, I saved money. You financially should be responsible for that. You shouldn't be living paycheck to paycheck, because you should have generated income the whole time, or you should have been able to live underneath your means in order so you can save money to have money in crisis like now. This is some of the principles. I don't agree with everything that Dave Ramsey say, but this is one of the things. You should have at least 3 months of your emergency money to the side of how you pay your bills. So if you lose your job, of your monthly income. That should be everybody's goal in times like this. So this is why when banks give loans, they want to look at bank statements, because it matters, y'all. It matters. This all tells about who you are financially, how responsible you are. If you don't know, that stuff matters. How much income you make matters. So now, to generate income, if you have to, participate in the gig economy, to do DoorDash, do Uber Eats, that's a way where you can show more income. You get a 1099. So you can say, hey, I have income that comes in. That counts, believe it or not. That shows that you're getting another stream of income. Now, a lot of people laugh at that or shun that. No, that's ways of showing revenue. Okay, so it counts even if you're going to buy a home. Oh, I do this also. That counts as money. It counts as income, especially if you did that for a year. So you need to take these fundamentals in mind. These are fundamental truths, processes that the banks look at, not just a credit score. That's not going to do it. That's why I tell you guys to look at your goals. What is your goal? And you need to pivot yourself in the goal. So there have been some changes to a lot of bank standards for buying a home through FHA. So there's certain banks like Chase, Wells Fargo, maybe Bank of America that now want a 680 credit score, 650 in order to lend to you. But the federal government didn't change their standards. I think some other banks that didn't change that standard, the 580 credit score, they're saying, some other banks saying, well, we'll give you the FHA with the 580 credit score, but we want you, instead of the 3.5% down, we need 10% down. So I say that to say a person can have a 580 credit score and get a house where a person with a 700 credit score or a 725 credit score might not qualify for the house because they might have too much debt to get the same house the person that with the 580. The person with the 580 might have no collections and don't have anything outstanding they own, so they can get the house where you might not can't because you might not make enough income, or you might have some debt reporting, tax liens, whatever. Oh, the IRS, something that's reporting that will prevent you to qualify for the house. So you need to make sure that you focus on certain things. Focus on your goals. So that's what you want to do. Make sure you focus on your goals. Research it out, what you're trying to look for, because there's other things that might need to come in play. A lot of people say, well, I want business credit. And then, well, that's one of the requirements. You need to get a credit line, unsecured line of credit of $5,000. There you go. You're welcome. There's your answer. There you go. If that's what you're looking for, if you have a 750, 780 and don't have that, you're not going to qualify. Don't nobody care. They're looking at that as one of the main standards of business credit to personal guarantee. Okay, so I hope this was helpful, you guys. I hope you have a blessed and productive day. If you have any questions, feel free to ask them in the comments. Be blessed.